So with today being such an important video, I thought I would take my vest off. No, but I mean, in all seriousness, this is something that's very important and something that should be addressed if you're an investor in Canada. If you've been following our content for a number of years, you know how much we, to put it lightly, despise mutual funds. They're ineffective, they are cost Canadians millions and millions of dollars in unnecessary fees, upwards of billions of dollars collectively, and just simply are not an effective way to invest money in today's marketplace. Now, that doesn't mean that there isn't a place for mutual funds for beginning investors and for making contributions, but very often if you have even say $25,000 or more to invest, you really should be considering the validity of investing in a mutual fund. And it's really for three simple reasons. Number one, over a long period of time, 15, 20 years and beyond, virtually no mutual funds historically have outperformed the market overall. And that's staggering. There are short-term periods where yes, they can outperform and so on. But if you look at it over a long period of time, the performance always lags the underlying index. You got to remember that you are actually paying a manager to underperform that market index. So that doesn't make any sense at all. And that leads us into number two, which is also the first resolution that we talked about this year, which is the fees are just too high. Mutual funds on average have anywhere between 2.5% to 3% MER or manager expense ratio, which simply is just going to eat too much into your retirement savings and provide results that you're just not going to be impressed with. And the third one is that the reason why most actively managed investments really in the world can't outperform indexes because managers are trying to really feat the impossible. They're trying to know what to buy, when to buy it, and also what to sell and when to sell it. So those four things, they have to get extremely accurate, better than any other manager ever or anywhere in the world, in order to beat the market index. So the odds are stacked against them, the probability is just too low, and the longer that you invest, which is really what most of us are accomplishing in our lifetime, the further and further away that you are going to be from outperforming those markets. So once again, avoid mutual funds at all costs. Yes, there are special circumstances, but in general, they are ineffective ways to invest. Also, if you want to get more information, more specifics on exactly why mutual funds should be avoided in our opinion, check out our YouTube channel under Precedence Private Wealth and Precedence Capital. There's a playlist there where it actually discusses the real reasons why you should be avoiding mutual funds. And I think there's 8 videos. Don't judge the editing and the video production as those were shot a long time ago, but they're just as true today and something that should be considered.